Welcome, ladies and gentlemen, out of our studios here in Herisau Commodity-TV in Switzerland. And we are really happy and proud we have for you now here Sean Rosen, the CEO and chairman of Osisko Gold Royalties. And of course, we want to get an update from him. Sean, welcome and pleasure having you here.
Jochen, always a pleasure to see you.
Fantastic. We are already a long time on the road together here, and it's great to get now an update for our viewers now. Osisko Gold Royalties, fourth largest royalty company in the world. What does it look like these days in those markets for you? Do you still find good opportunities?
Well, we think that there's a lot of opportunity. We're in a bit of a pullback market right now. So, buy low, sell high is the theme. We've been executing that strategy for the last couple of years, and we've certainly seen a great start to 2018 with our investment in Victoria Gold, our investment in Horn 5, and a continued investment in Barkerville Gold. So we are deploying capital. We're very bullish about the scenario in which this is a great entry point to make investment. And we think it's a great entry point within the overall market to be entering the commodity cycle, especially on the gold side.
Absolutely. Entry point, that's, I think, one of the good keywords here. The stock price really suffered the last months. Sure. Is there, let's say, any external reason for that? Well, aside the market, it was weak.
Yeah, I think that we saw some market weakness. I mean, in terms of where we are, Osisko Gold Royalties is 4.5 years old. We've brought the company from a $500 million market cap in 2014 to a $1.5 to $2 billion market cap today. To do that, we were pretty aggressive in our acquisitions in 2017 and 2018. So we have a high growth profile asset base with many companies either in construction or in ramp up. So I think there's a bit of a discount and opportunity for shareholders right now as a great entry point to look at the stock. And we expect a full re-rate. Once some of these ramp ups and construction projects come to fruition over the next 12 to 24 months. But we set the stage to be a high-growth company. We are a high-growth company, and we have the highest growth profile within the royalty and streaming space.
Absolutely. I think your next ramp-up, I would call it, is Victoria Gold. They will go in production in the second half of next year, right? And you are a big part of the financier. Maybe you can elaborate a bit.
Sure. We issued $98 million of 98 million Canadian to purchase a 5% top-line royalty on the Eagle project, which is Victoria's flagship asset in the Yukon. We also bought 15.5% of the equity because we believe that the company will re-rate as we go forward. So it's a $148 million Canadian investment for us, so quite a big bet. And we're quite happy to see the evolution of that. And John McConnell and his team are doing a great job to get us where we have to be. And this is going to be a great mine. It's going to be 220,000 ounces, low-cost producer, top quartile economics in terms of being around 550 cash costs. And we think there's a significant and exceptional amount of exploration upside within the camp. So not only will we make our money on the royalty that we've already purchased, plus the equity during the re-rate, but we'll be there for a long time as this potential evolves and exploration continues to add ounces to this story. I think it's one of the great Canadian stories out there and one of the great gold stories worldwide in the space. It's going to be very important as we look at mine production, mine supply for senior and mid-tier companies as they look to replace their reserves and their resources.
So your expectation is also that, let's say, the mine supply is shrinking, right? From, let's say, this year onwards, the next couple of years?
Well, absolutely. I mean, if we look at all the big companies right now, most of their assets in their so-called sunset years where they're having a hard time adding and replacing ounces. So we think that the development side of the company is the sector is where we're going to make the most money as assets like Eagle become very scarce. There will be a premium paid for those. We've been there and done this before with Canadian Malartic in 2014.
You've done really well.
Well, we built Canada's largest gold mine, the world's 10th largest gold mine. Goldcorp put it into a hostile $2.5 billion. We ended up selling it for $4.1 billion. It's still Canada's largest gold producer, and we saw a premium paid for that. But I think as we go forward, all of these Canadian assets will get paid for. We saw a premium on Kirkland Lake Gold, which is Australian-Canadian combined assets. But as the world gets and becomes a more dangerous place, The Canadian Australian assets in particular get high value. And for me, the most potential is in Canada, where we have quite a bit more upside left in the gold space.
Absolutely. And I would say you are really like a cash harvesting company now. That's the beauty of the royalty business, of course. I mean, you have 19 employees and you harvest $130 million. It's a lovely relationship, isn't it?
Well, I mean, the royalty and streaming business has always got a premium in the market space. We're the fourth largest in the world right now. And as you said, we make money every day, 7 days a week, 365 days a year. And by the time such today, we'll have earned $262 million in revenue with 19 employees. And that's a great business model as we go forward. And one of the potent returns is we get to pay a 2% dividend. We run a very disciplined balance sheet, and we're cash flow positive. We don't need higher gold prices or different markets to make money. We make money right now, right here.
Yeah, it's $262,000 a day, not millions. Yeah, just to correct that.
$262,000 a day.
Because you are nicely listed. We have to correct that.
Absolutely. Thank you very much for that correction.
Yeah, no problem. Concerning, let's say, the market overall, I mean, a weak market must be for you a great El Dorado because you find good projects cheap, of course. So would you say, you still find enough interesting projects for the future you can put on? I mean, you have 130 assets already and you're harvesting from 19 now. So what would you say for the next 3 years?
Obviously, the royalty and streaming business is mostly we participate in the market when equity markets are lagging. As a source of capital, and one of the main things that we do is that we're last money in source of capital for project development after permitting and development. That's where we're spending money right now, and that was, Victoria is a perfect example of that. As we go forward and help them develop the Eagle Mine, we see lots more opportunities like that, and we'll continue to deploy capital in good projects in good jurisdictions, especially in these kind of markets.
Yeah, and I think you have done an exceptional job in, let's say, to balance the risk, right?
Well, I like to think we have. I mean, we have cash flow right now. 60% of our asset investment right now is in production. About 20% is in assets that are in already constructed and then ramp up, and 17% in development. So
perfect.
We're in a pretty safe jurisdiction in terms of how our balance sheet works and our cash flows are. And we see our cash flow really growing significantly. We expect about 80,000 ounces of gold equivalent ounces this year, with an 87% margin, which is way better than Apple would make on an iPhone.
Absolutely.
And we continue to see that growing until 2023, just with our current assets. We expect to get to somewhere around 170, 180,000 ounces of gold equivalent, assuming some of our other companies evolve. So we have the highest growth profile of young assets, especially new ones, in the royalty and streaming space. And that's the opportunity for shareholders right now, is that there's still a bit of a risk on discount for those ramp ups and the evolution of those assets. But we think that risk comes off significantly over the next 24 months.
Fantastic. But that means also when you have new and young assets, it means that you have a much longer mine life for the future compared to let's say the major companies, where the assets are sunsetting, as you said it, right?
Well, I like to say we're at the start of our story. Some of the other ones are at the point where their story has to be refreshed and they have to evolve. But our asset base is quite young and ready to be refreshed. And, I think as we look forward, these assets are all going to become very important. Some of them may change hands and move on to senior operators. But we've set our stage to be successful, at current commodity prices or even lower. And anything that happens in the commodity price will just be a multiplier of our success.
Do you think that might be a reason that you have a much longer mine life compared to other companies, if I compare it on your asset base, that Caisse de Dépôt, for example, invested? Because to have a pension fund as an investor, they must have a very long horizon, right?
Well, yeah, I think that the Caisse de Dépôt is a very high quality investor.
Exactly. Well, it's best what you can have.
The second largest pension fund in Canada. They own 12% of the company as we sit. And we see other pension funds and significant institutional players. And Osisko Gold Royalties is really a company that we've tailored to be institutional investor friendly, especially for generalists, in that we pay a 2% dividend. We have a stable base. We have a lot of volume. We are listed on the New York Stock Exchange, so we follow complete IFRS compliance. We're also listed on the TSX, and we trade about 60% of our volume in the U.S. exchanges.
That's what I like.
We consider Osisko Gold Royalties to be an institutional-friendly investment organization.
Absolutely.
And we cater and we tailor everything we do to make sure that we are of institutional quality.
Last question, room for maybe in the future a dividend increase? As you know, we Germans love the dividend.
Yeah, well, and me too. I mean, I'm a shareholder, so any dividend increase is a benefit to myself and my family. We've increased dividends 3 times in 4 years, and we'll do it again according to the evolution of our cash flow. Right now, we have a very sustainable dividend policy. We set the stage so that we would never have to reduce dividends. So right now we pay about a 2% yield, which is at the top end of the royalty space. But in the long term, we expect to increase that dividend with success.
Perfect. It was a great final word, Sean. Thank you very much. All the best. And we love to put more mines in production through you guys.
We'll be there to do it. And you can look to us to provide due diligence and guiding light.
Great.
And the resource for quality investment.
Yeah, that's how it should be. Thank you very much. Cheers. Yeah, ladies and gentlemen, there was Sean Rosen, the CEO and chairman of Osisko Gold Royalties. Yeah, you heard it. The company is in fantastic shape. It's a super risk balance, 130 assets they have under their, I would call it, management and observation, 19 cash flowing assets so far. And of course, the 5% royalty on the Canadian Malartic mine is one of the best royalties, or actually it is the most valuable royalty and profitable royalty in the world. And the company is net debt free. Don't forget about that. And Caisse de Dépôt is one of the largest shareholders. So, I mean, if a pension fund can buy the stock, you should really make your due diligence and check out the company. Thanks for watching us, and bye-bye from Switzerland.